Hey guys, Angel here with the Bullish Bears team. I am making this video today on stocks versus options. So when many people think of trading in the stock market, they typically tend to just think of stocks only. However, there is also options trading. So we're going to talk about the different types of securities that you can trade as far as stocks versus options. So the stock market is a tug of war between buyers and sellers. And because of that, obviously you have price that moves up and price that moves down. And sometimes the market trades sideways, and then that can be a really frustrating time to trade because it always seems like the charts are garbage, the stocks are garbage, the profit potential is garbage. So what if there was a way to be able to profit in any type of market? Well, good news is there is, and that is with options trading. So options do have a lot of moving parts, but that can affect your profit potential both positively and negatively. And stocks aren't nearly as volatile, but that is a good thing if you're doing some long-term investing, or if you're day trading, or any other strategies you need to use to grow your brokerage account. So we are going to talk about stocks. And we have Investopedia pulled up, which has a stock defined as a type of security that signifies ownership in a corporation and represents a claim on part of the corporation's assets and earnings. So what does that mean? In other words, if you own any amount of stock, you're considered a shareholder and you own a stake in a company. But it all depends on how many shares you own. So if you own 100 shares or 50 shares or 500 shares or even 10,000 shares of a company that trades 200 million shares or 30 million shares, then your stake in the company is minuscule. So you don't really get a say when it comes time to board meetings, which would be kind of fun if they let everybody have a say, but then nothing would ever get done. So the majority of people who trade stocks typically sell when they have a profit. I have this thing I like to say: you never go broke taking your profits. Makes Stan laugh, but it is really true. If you think about it, you don't go broke taking your profits. I mean, you may wish that you had held longer, and sometimes hindsight is always 20/20. So sometimes you're looking at a stock and you're like, man, I should have held and I would have made more money. But there are a lot of times, sometimes that happens, but there are a lot of times where holding, trying to hit that home run out of the park, results in giving up profits, and that is never fun. So you can day trade stocks, you can swing trade stocks. People typically like to swing trade stocks because of the PDT rule. So if you don't have an account of $25,000, then you're limited in how many day trades you can make a week. So if you buy a stock near the close and then sell it at market open, that does not count as a day trade. So you can buy that while still making a profit. You also can invest long term. Stocks are the foundation of investment portfolios, so investing in stocks long term is always a great thing. And then there is options trading. So we're going to take a look at the definition of options. And an option gives you the right, but not the obligation, to buy or sell the underlying asset at an agreed upon price during a certain period of time or on a specific date. Now that might sound like a lot. So what does that mean exactly? So with options, they are wasting assets, so they do expire. So let's actually pull up an options chain. So we have an options chain for Amazon. So you can see here the strike price is the price that you believe a stock is going to hit. So if you think that the stock is going to go up and you believe it is going to go up to $1,752.50 by next Friday the 16th, then you would buy this contract right here. Now the great thing about options is that one contract controls 100 shares, but it is important to remember that this expires. So at the end of next week, if your options contract has not reached that price, then you're going to lose the entirety of your trade more than likely. So that's what makes options very risky, because they have something known as the Greeks, which you can see right here: gamma, delta, vega, theta. And that obviously affects profit and loss potential. So that's something that you would need to study and figure out exactly how it all works. It's not as hard as it sounds. It's actually pretty easy once you get the hang of it. I think probably the most important is theta, because that is time decay. So like I said, options are wasting assets. So for every day that you hold an option as a buyer, you're giving part of your profit to the seller. And it's actually a well-known fact that options expire, 80% of options expire worthless. So as a seller, you can make a lot of money selling options to people that don't really know how to trade them, and make a lot of money on just the time decay alone. The great thing about options, and I trade options, so maybe I'm a tad bit biased, but the great thing about them is that you don't need a lot of capital to trade these big time stocks. And that can help you grow your brokerage account to however big you want to do it. And it's a lot of fun trading options, in my opinion. I really enjoy doing it. And with options, the return on investment has the potential to be 100-fold more than a stock. So you can buy a stock and have it move up $1 and you make $1 per share. You can sometimes do that with an option, and it's like a lot more depending on the strategy that you use. So options can give you a lot more of a profit, but at the same time, because of the different parts like the Greeks or implied volatility, anything like that, it can also take away and wipe out your entire profit and your entire trade. And I have been guilty of trying to hit an out of the park options trade more than once. Instead of following my rule of thumb, you never go broke taking profits, and I've ended up losing on a trade. So you do have to be careful with options because they can be risky. However, the risk is well worth the reward if you take the time to study and learn. So let's look at Amazon right now. Right now it is trading pretty nicely. We'll look at the daily. So you can see that it is just shooting up. And let's say I wanted to get in on that action, but one share alone at this point in time is trading at $1,748.36. So if I buy one share, I have to put out that amount of money. So one options contract actually controls 100 shares. So if you go based off of that, let's say we're going to just go ahead and then buy Amazon with 100 shares. So I would have to multiply that $1,748, and it is now 21 cents, times 100, and that would bring me to $174,821. Now, I don't know about you, but I do not have that kind of money in my brokerage account. That is a lot of money. If I had that much money, I would be taking it out and going on vacation or something. I don't know. I don't think I would really do that, but that's a lot of money. And the majority of traders, the average trader, is not going to have $174,821 in their brokerage account just to go out and buy 100 shares of Amazon. So that's where options can come in quite handily. So if I'm saying that I believe it's going to go up to $17.50 by next Friday, and you can see that it actually hit $17.50 here about 10 minutes ago, I would be paying $37.25 per contract. So what does that mean? You would multiply that one contract by 100 shares. So if I was only buying one contract, is now down to $37.10. I would be paying $3,705 to own that contract, which is 300 and what is it? Now it's see, when the price moves that much, just leave it the certain price so I can do my video. Thank you. So I would be paying $3,685 as opposed to $174,821. So you can see that's a huge difference, and you can grow your account that way. However, because of obviously the moving parts of options, you have to pick the right direction. If you don't pick the right direction, there goes your whole trade. And that can be pretty scary when you sign into your account and see that. But options have strategies to make money in any market, and that's a great thing. You can do option spreads and you can do vertical spreads. And even if you go right in here to where it says spread and you do, is it in? Oh no, it's right there. If you do vertical, that pops up right there for you, and you can see that that is even less money to trade. So I would only be trading, if I bought one, $180 to get to this point, and to have it trade between these two prices. So it limits your profit to do spreads, but it also limits your risk a whole lot. So you can do day trading stocks with options, and you can swing trade spreads. You can do all different kinds of things to grow your account and protect yourself. And that's why trading stocks and options together can be a great thing. I personally, I just like options. I like that they're a little risky. I like that they are exciting and offer a potential to have a bigger return. It's a lot of fun. But you have to practice trading, and you need to study before you just jump right in and start trading stocks or options. Otherwise, you could end up just blowing up your brokerage account, and nobody wants to do that. That's no fun. So you can actually head over here and read our blog post on stocks versus options to see if there's one that you would like better, or if you would like to trade both of them at once. And then you can come over here, and I recommend taking our courses. I learned a lot when I first started out with the Bullish Bears taking their courses. Their candlesticks course helped me immensely in finding the right direction, because trading options is speculation and you need to hit direction out of the park. It's really important to learn how to spot patterns and how to read patterns and take advantage. Sometimes I take what I was going to start out as a swing trade, I'll just go ahead and take it as a day trade, because I can see that it's going to protect my profits more to do that. And then if I'm done trading for the week because I reached my amount of day trades, then I'm done. So you have to be able to sit things out. You have to be able to spot patterns. You have to be able to trade risk management. You can take the day trading course, the swing trading course, the options trading course. Take advantage of the courses. They're great tools. That's how I learned when I first started out, and now look at me. I am making videos and doing things for the Bullish Bears because I actually buckled down and I did it. So if I can do it, anybody can do it. It's so much fun. I love trading options. Haven't really ever gotten into stocks just because I like to be able to play the big stocks like Amazon, and I don't have to put up as much money to do so, and I can make a little bit better return on my investment. So it's all about your preference and how you feel and what you want to risk and what you're willing to learn. And if you guys like this video, then please like, share, comment, and I will try to, Dan keeps reminding me to comment back to you guys, so I will be better at commenting back to you guys about any videos that I make. And subscribe to our YouTube channel. That way you can get notifications when anybody posts an updated video, whether it's options or the watch list or day trading or swing trading. We're always putting out content for you guys. And follow us on social media. We have a great Facebook fan page, a great community on Facebook. Our Instagram posts a lot of funny memes. And it's great fun to be a part of the Bullish Bears. And I hope you all join us, and I will see y'all later.